NVIDIA shares, meantime, in the green today and up about 7% since the company's last earnings report. Our next guest says this may be a kitchen sink quarter for the chip maker. Joining us is Gill, Managing Director of Semiconductor Equity Research at Needham. And he has a buy rating on NVIDIA with a 185 price target. So we're hoping for a kitchen sink quarter. What would that entail specifically in terms of what NVIDIA says about the outlook, do you think, Raji?
I mean, we're certainly hoping for a kitchen sink. I think, what Micron spooked us a little bit because when they cut numbers, we thought they kitchen sinked it, but then they went out ahead subsequently and lowered numbers further. I think there is going to be some continued risk to the October guide as Ethereum moves to proof of stake. The demand for miners goes away, so there's still a fallout from that. That'll impact their gaming business. China and Europe are still a very large percentage of their gaming market. Both markets the economies are weak there. So we're hoping that the October guide will be a kind of a reset. We're also paying very close attention to both gross margins as well as data center. On the data center front, on the pre-announcement, data center growth grew only about 2% sequentially, and it decelerated on a year-over-year basis. Data center is the principal growth driver of the company. So we really need to see that that business is not slowing down in a meaningful way. And then additionally, on the gross margin, they took a $1.3 billion charge. Inventory charge for their gross margins were around 46%. This is versus 67%. They clearly took the inventory charge and took the hit initially. We want to have a better understanding of what are the normalized gross margins coming out of this inventory correction with gaming. What are those normalized margins going to look like once we clear out this inventory? Those are going to be very important.
You mentioned the transition in Ether to proof of stake, and you categorize that as in the gaming segment. I mean, I think there's a little bit of there's a crossover here, right? It's the gaming products, the chips that are used for those purposes. What about though the end demand for personal gaming and things like that itself? Have we seen a trough?
Well, I don't think we're out of the woods yet with respect to gaming, core gaming, ex the Ethereum mining. And it's really due to a couple of reasons. I think China is about 25%, represents 25% of their installed base of GeForce gamers around the world. The Chinese economy continues to be very weak. All our conversations with companies that sell into China indicate that the Chinese economy is not recovering anytime soon. There's a housing crisis. There's multiple issues. So the China consumer, we think, is still has some challenges. I think, secondly, Europe is also a big percentage of their gaming market. The European economy is weakened. So we really need to see that those two markets have started to slow down. The pricing has fallen pretty dramatically for NVIDIA. What NVIDIA can get for its gaming GPUs, say a year ago. A year ago, they used to get 2 to 3 times MSRPs. The pricing now has fallen as more supply has come in.
Right.
So the pricing of GPUs has come in. So I think we're not out of the woods yet in terms of gaming. A lot of that is understood by the street. I think the main issue is really data center.
Got it. All right, we'll see how the numbers come through. You got a 185 price target, pretty modest upside to where it is trading right now. Raji, thank you very much.